All right, so if you have been investing in the market this year, you're probably down a bunch. And I know it's very scary right now because essentially your portfolio has been cut in half, if not more. Some people have massive portfolio losses. Some people have been completely like margin called and now they're like in panic mode and trying to trade the market up, down, left, right. I know it's very scary. And one of these things that kind of reminds me of is like, have you ever watched those shows where like people are trying to survive? Things like Saw, things like Kaiji, things like Squid Game. All these shows have one thing in common, and is that they're all trying to survive. And if you think about it, the financial market, literally the whole financial system, is essentially a giant survival game because there's things like options, there's things like casinos. They're all basically you trying to take a little bit of money and trying to turn it into a whole bunch, and you kind of have to survive your way through it. And most people aren't gonna make it. And it's kind of funny because, a lot of these also like super deadly like survival shows also have to do with money. And there's a reason why money and survival have, a very strong connection because of the word fear and the word greed. These are very extreme emotions. In fact, I like to say that your ancestors or people that came before you, people that could have set you up financially for a better future so you didn't have to go through this phase that you're going through, they probably got wiped out by one of these periods. Bills came due, they had to pay things. They probably bought things like houses or something that did at really high prices. Didn't have like enough savings or they didn't have enough cash generating assets to offset a lot of job loss. Things like this, they wipe out a lot of people. And right now, I fear that we might be going through one of these periods. Periods like this are very brutal, but they're also periods of generational wealth if you make it to the end. So if you're here for the long term, your game isn't to try to make money in the market because this is not a money period. This is not a time to make money. This is a time to, hamp down on your situation, figure out, do I need the money that I have in the stock market? And if you do need it and you have bills to pay and you have massive debt, you should probably focus on getting that out of the way. I know it's gonna suck to sell in the market. I know it's gonna be painful, but at these kinds of periods, I'd rather you pay off your debt and become a bit more financially sustained and not have to worry about the short term. So then you can have a leftover amount that you can put in the market and grow from there. Ideally, you want to have cash generating assets because these cash generating assets are going to be, you're not going to have an emotional attachment to it. If you have $500, $600 a month that you make in leftover and you put that in dividends and the dividends pay you money, then you don't have to worry about the money that you get from dividends because every month you're going to get the same amount. So it's just easier and more, it gives you more peace of mind. And if you look at all the generational wealth guys, like things like Warren Buffett and all that, what did they have? They had cash generating assets. These YouTubers that you see that are spouting nonsense about the market going down or the market going up, these people, no matter what happens to the market, they have cash generating assets and they can dollar cost average on the way down and on the way up. They will be just fine. But you are not like them, guys. You are not a multi-million dollar YouTube channel, or you're not a billionaire investor that has a 50, 60K a month in dividends. It's a crazy amount of money they can make from dividends. So you can't really ride the wave. You have to go into survival mode. A lot of people that you look up to, they're short term. They look at things day to day. They have their long term convictions, which that's what I kind of look for. I look for their long term convictions, but they're short term. They create content that's meant to the short term, that's meant to make you worried about your future. And what they're trying to do is they're trying to turn you into traders. And my belief on trading. Trading can work if you have the money to make up for the losses at the end of the month. But if you're like day to day and you're trying to, you have your minimum wage job and you're trying to turn 1,000 into 100,000, it can't happen. But chances are, it won't. Especially if you have, let's say, 20,000 in savings and now you want to turn that into 100,000. Oh, if you mess up and that 20,000 becomes 1,000, that's a year, 2 years of work, right? How are you gonna make up for that? So yeah, guys, I know it's a very scary time in the market. I know you probably want to sell, or you probably want to try to time the market and find out where the bottom is. And like I said, guys, it really just depends on how you set yourself up, because these periods of time, they really do show. I mean, there's this saying from Warren Buffett that you can really tell who is skinny dipping when the tide goes out. And these times of periods, like these are where the tide is starting to come back down. The money that was flushing in the economy, it's starting to come back down. And what you see is that this time is just similar to 2007, 2008. It's very similar to 2000 .com bubble. Everyone, well, a lot of people, I said the majority, are skinny dipping. And what's the biggest indicator of skinny dipping? Debt. And debt is through the roof right now, guys. So I'd say if you're investing in the market and you have debt, I would say be careful. Be extremely careful, because if this keeps getting worse, which looks like it will, you're gonna get wiped out. And you know who's not gonna get wiped out? These rich people. These rich people that you look up right now that are really quiet. You notice they haven't said a lot of things, right? They're very, very quiet. The YouTubers are short term because they make money from the short term, so they're trying to like be short term. But they have long term convictions. That's what you should look for, But the billionaires and the millionaires are very quiet. They're waiting. They know that if this gets worse, this is gonna be a wiped out situation. A lot of people are gonna get wiped out, and that's when they start buying and buying and buying and buying and buying and buying, and the rich keep getting richer. And it sucks because they kind of rob from the middle class and the poor people. They rob from the people that don't have a lot, and then they accumulate for themselves. So do you really want to be part of these people that get wiped out, and then they come in and they steal your money, and then they're like, oh, the market's fine, like 2 years from now or a year from now, oh, the market's just fine, look, ha ha ha, and they made a whole bunch of money? I don't think you want to be that. I think you want to set yourself up, and no matter the situation, if the market's going to the moon or it's going to the to the bottom of the ocean, you set yourself up that you don't have to worry about the market on the short term, and you just know that on the long term, as long as you buy good companies that you believe in long term, you will make your money multiplied. You'll be just fine. So yeah, guys, just want to give you guys a warning on the current stock market. I know it's very scary. If you feel like you're gonna get wiped out, look at your situation, guys. I'd say pay off your debt first. If you have money in the stock market, pay off your debt first. Like don't invest more in the stock market. If you're a margin, get out of margin. Just try to make it through this period. And once you get that debt paid off and you have a monthly amount that you can dollar cost average into the market, just go all in into, I don't know, if you're really risky, go into options and just try to make up for it with options, so when the market rebounds, you can multiply your asset gain if that happens. But if if the stock market keeps getting worse, then you're set yourself up where you're not worried about it. Now, if you do need the money that you have in the stock market, I would honestly look at your situation, and if you have to sell to pay off your debt, to have 6 months or a year where if this keeps getting worse, you're good, and your market, your money isn't being sucked by the stock market, I would take it out. If you're worried about the future right now, I would take it out, because you want to survive through this period. This is a scary period. Nobody knows when it's going to end. Nobody knows when it's going to end. It might take a year or two. It might end in 6 months. It really doesn't matter when it ends. It really doesn't matter how long it lasts. What it matters is that you make it to the end and you come up out of it in a better situation, because that's where you really will make the money. That's where you'll build generational wealth. That's where, people will look up into you 5-10 years in the future, and they'll be like, well, that guy never sold through the market, and look where he's at. His Bitcoin is 150K, he bought the growth stocks, and now he's up 600%. It really comes down to just believing in the long term and setting yourself up so the short term doesn't shake you out. Because most people will be shaken out by the short term. That's just how the market works, You trick people into throwing money at it, and then that money is essentially emotionally slushed up and down until people get shaken out or people are thrown in. They get FOMO'd in. It really just depends on what cycle you're in, and right now we're just in a survival period. It doesn't matter if you're trying to be long term or short term. You're gonna get shaken out. All the bulls that got into the last cycle, they got shaken out. All the bears that were trying to be like, oh, this is a bucket, they got flushed out by the bullish market. Just how it is. So as scary as these time periods are, if you do manage to make it till the end, and you manage to survive this whole period, and you stayed in the market, and you never got shaken out, and you kept dollar cost averaging into it, or you came back and you're putting $500 a month every month or whatever you have left over, you make it till the end of this. You survive what 90% of people, not even multi-billion-dollar companies, can survive these periods sometimes, and you'll make it till the end. You'll be in the first class seat to fortune, guys. You will make so much money when this rebounds, because inevitably it will.